Question 1. Which of the following best describes the primary distinction between first-party and third-party cyber insurance coverage? A. First-party coverage protects against data breaches, while third-party coverage covers damages to customers and third parties. B. First-party coverage only applies to incidents involving external threats, while third-party coverage is for internal cyber attacks. C. First-party coverage deals with the policyholder's own losses, while third-party coverage protects against damages to external entities. D. First-party coverage is limited to business interruption, while third-party coverage covers all other types of damages. Answer: C. First-party coverage deals with the policyholder's own losses, while third-party coverage protects against damages to external entities. Explanation: First-party coverage applies to losses incurred by the policyholder directly, such as data breaches, business interruption, and restoration costs. Third-party coverage, on the other hand, provides protection for damages or liabilities to external entities such as customers, vendors, or regulators. A strong understanding of these distinctions is vital for accurate assessment of a company's risk exposure and the corresponding insurance needs. Question 2. Mr. Davis operates a small retail business and has a cyber insurance policy that covers data breaches, network security, and business interruption. Last week, his business experienced a ransomware attack that encrypted customer data. Which aspect of the cyber insurance policy is likely to cover the ransom payment to unlock the data? A. Business interruption coverage. B. Data breach coverage. C. Network security coverage. D. Exclusions section of the policy. Answer: C. Network security coverage. Explanation: Network security coverage is designed to protect against attacks like ransomware, which compromise the integrity of the business's digital infrastructure. This coverage typically addresses the costs associated with recovering from such incidents, including paying a ransom if necessary. Business interruption coverage would address the loss of revenue due to the downtime, while data breach coverage is more concerned with notification and recovery after customer data is exposed. Question 3. Which of the following is a key factor that influences the underwriting process for cyber insurance policies? A. The level of cybersecurity protocols implemented by the business. B. The business's historical financial performance and profitability. C. The geographic location of the business's headquarters. D. The number of employees within the business. Answer: A. The level of cyber security protocols implemented by the business. Explanation: The underwriting process for cyber insurance takes into account various factors, including the business's cybersecurity protocols. Insurers evaluate how well the company manages its cyber risks, such as using firewalls, encryption, multi-factor authentication, and regular security audits. A business with robust security measures in place may qualify for low premiums, as it is considered less likely to suffer significant cyber losses. Other factors like profitability, employee count, or location are not as directly relevant to cyber risk assessment. Question 4. Which of the following is a primary responsibility of policyholders under a cyber insurance policy? A. Ensuring that all data breaches are immediately reported to law enforcement. B. Ensuring that their cybersecurity protocols are continuously updated and effective. C. Conducting their own forensics investigation after a cyber attack. D. Reporting all cyber incidents to the insurance company only after the incident is resolved. Answer: B. Ensuring that their cybersecurity protocols are continuously updated and effective. Explanation: Under a cyber insurance policy, the policyholder is responsible for maintaining effective cybersecurity measures to minimize the risk of incidents like data breaches or ransomware attacks. This includes regularly updating software, applying security patches, and ensuring proper data encryption and access controls. Failure to do so may result in the insurer refusing coverage due to negligence. Reporting incidents promptly to the insurer is also essential, but cybersecurity practices are the primary responsibility. Question 5. Which of the following statements best describes the concept of third-party risk management in cyber insurance? A. It involves managing the risks that third parties face when they purchase cyber insurance policies. B. It focuses on mitigating risks posed by external entities, such as vendors or partners, to the insured business. C. It refers to the risks of handling data breaches within a company's own network. D. It involves managing the risks posed by employees and contractors within the insured company. Answer: B. It focuses on mitigating risks posed by external entities, such as vendors or partners, to the insured business. Explanation: Third-party risk management refers to addressing potential risks that arise from business relationships with external entities such as suppliers, service providers, and partners. These third parties may have access to the insured's data or systems and, if compromised, could result in a cyber incident affecting the insured business. Cyber insurance policies may include coverage or exclusions based on the insured's management of these third-party risks. Question 6. Sarah's company has purchased a cyber insurance policy that includes coverage for network security, data breaches, and business interruption. A third-party vendor's security flaw allowed hackers to access sensitive customer data. Which type of coverage will likely apply to the losses caused by the vendor's vulnerability? A. Business interruption coverage. B. Data breach coverage. C. Cybersecurity liability coverage. D. Third-party liability coverage. Answer D. Third-party liability coverage. Explanation. Third-party liability coverage addresses damages caused to external parties such as customers due to the actions of the insured or their third-party vendors. In this scenario, the vendor's security flaw exposed sensitive data and the business is liable for the breach. The insurance will likely cover the costs of notifying affected customers, legal expenses, and other related damages caused by the vendor's vulnerability. Business interruption and data breach coverage would not apply in this specific case as the vendor's actions are at fault. Question 7. Which of the following is a primary exclusion typically found in cyber insurance policies? A. Coverage for data breaches due to pre-existing vulnerabilities. B. Coverage for system failures resulting from natural disasters. C. Coverage for intentional acts of cybercriminals, such as hacking. D. Coverage for ransomware attacks after payment of the ransom. Answer A. Coverage for data breaches due to pre-existing vulnerabilities. Explanation. Cyber insurance policies often exclude coverage for data breaches or other incidents that result from pre-existing vulnerabilities that the policyholder failed to address. This emphasizes the importance of regular cybersecurity assessments, patching known vulnerabilities, and ensuring that systems are up to date. Coverage for system failures due to natural disasters or ransomware attacks, on the other hand, may be covered depending on the specific policy terms. Question 8. Which of the following regulatory frameworks is commonly used to assess and mitigate cybersecurity risks when underwriting cyber insurance policies? A. Sarbanes-Oxley Act (SOX). B. National Institute of Standards and Technology (NIST) Cybersecurity Framework. C. Health Insurance Portability and Accountability Act (HIPAA). D. General Data Protection Regulation (E). Answer B. National Institute of Standards and Technology (NIST) Cybersecurity Framework. Explanation. The NIST Cybersecurity Framework is widely used by organizations to identify, assess, and manage cybersecurity risks. It provides a structured approach to mitigate potential risks and is commonly referenced during the underwriting process for cyber insurance policies. While frameworks like HIPAA or GDPR govern specific sectors, e.g., healthcare and data privacy, NIST offers a comprehensive set of standards that can apply across industries when assessing cyber risk. Question 9. Mr. Green operates a small software development company and recently experienced a breach of sensitive customer data. The breach was caused by a vulnerability in an external vendor's software. What should Mr. Green do first to ensure his company's cyber insurance policy covers the incident? A. Immediately pay the ransom demand to resolve the issue. B. Notify the insurance company and document the breach and its impact. C. Wait for the vendor to address the issue before taking action. D. Continue operations and handle the breach internally without external notification. Answer B. Notify the insurance company and document the breach and its impact. Explanation. The first step in any cyber incident should be to promptly notify the insurer and document all relevant details about the breach. This ensures that the incident is covered under the policy and that proper claims procedures are followed. Delaying notification or trying to handle the incident without involving the insurer could result in the claim being denied or coverage being reduced. The insurer may then guide the policyholder on the next steps, such as working with forensic teams or legal advisors. Question 10. Which of the following is the most significant challenge in pricing cyber insurance premiums? A. Determining the amount of coverage for hardware repairs. B. Assessing the financial stability of the policyholder's business. C. Estimating the cost of potential data breach notifications and legal fees. D. Calculating the frequency of cyber incidents in the industry. Answer. C. Estimating the cost of potential data breach notifications and legal fees. Explanation. One of the biggest challenges in pricing cyber insurance is estimating the potential costs of a data breach, which can include notification costs, legal fees, fines, and potential regulatory penalties. Since the cost of these events can vary widely based on the type of breach, affected parties, and the legal environment, insurers must carefully assess the policyholder's cybersecurity posture and potential vulnerabilities to accurately price premiums. Question 11. Which of the following would most likely be covered under a cyber insurance policy's data breach response coverage? A. Legal defense costs from a class action lawsuit. B. Costs to repair damaged physical IT infrastructure. C. Costs to notify affected individuals and provide credit monitoring. D. Costs associated with restoring the business's reputation. Answer. C. Costs to notify affected individuals and provide credit monitoring. Explanation. Data breach response coverage typically covers the expenses involved in responding to a data breach, such as notifying affected individuals, offering credit monitoring services, and handling related public relations efforts. Legal defense costs and reputation repair may be covered under other parts of the policy, but data breach response primarily addresses the costs of dealing with the immediate impact on those affected. Question 12. Which type of cyber insurance policy would be most appropriate for a business that needs coverage for both the damages caused by cyber attacks and the costs of restoring data lost due to ransomware? A. As and omissions coverage. B. Cybersecurity liability insurance. C. Cyber extortion coverage. D. Network security coverage. Answer. B. Cybersecurity liability insurance. Explanation. Cybersecurity liability insurance is designed to cover a wide range of expenses resulting from cyber attacks, including the cost of restoring lost data, covering damages, and handling any legal consequences. Ransomware attacks fall under this coverage, and it would help pay for the associated recovery costs. Cyber extortion coverage, on the other hand, specifically addresses ransom payments. Question 13. What is a key factor in determining whether a company's cyber insurance policy will cover a breach caused by a third-party vendor? A. Whether the vendor offers compensation for the breach. B. Whether the insured had a formal contract requiring the vendor to maintain cybersecurity measures. C. Whether the vendor had a previous history of data breaches. D. Whether the insured company's network was secure at the time of the breach. Answer. B. Whether the insured had a formal contract requiring the vendor to maintain cybersecurity measures. Explanation. Cyber insurance policies often cover breaches caused by third-party vendors, but the insured company must have taken reasonable steps to manage third-party risks. This includes having a formal contract that requires vendors to meet specific cybersecurity standards. Failure to address third-party vulnerabilities could limit or eliminate coverage. Question 14. Which of the following is an example of a cyber risk exposure that would not typically be covered by a standard cyber insurance policy? A. A data breach due to a hacker exploiting a known vulnerability. B. A cyber attack that causes the company to lose access to its computer systems for several days. C. Reputational harm caused by a data breach affecting customer trust. D. Loss of income resulting from a company's employees clicking on a phishing email. Answer. C. Reputational harm caused by a data breach affecting customer trust. Explanation. While many aspects of a data breach or cyber attack are covered by cyber insurance policies, reputational harm resulting from loss of customer trust is generally not covered. Cyber insurance policies focus more on direct financial losses, such as costs of investigation, legal fees, or business interruption, rather than the intangible costs of reputation damage. Question 15. Which of the following is most commonly a part of a cyber insurance policy's network security coverage? A. Cost of fixing faulty software. B. Compensation for business interruption caused by a cyber attack. C. Payment for damages due to a failure to meet regulatory compliance. D. Protection against physical theft of hardware and devices. Answer. B. Compensation for business interruption caused by a cyber attack. Explanation. Network security coverage typically includes compensation for business interruption that results from a cyber attack, such as a distributed denial of service (DDoS) attack. This coverage helps the business recover lost income and expenses incurred while systems are down. Issues like software faults or regulatory penalties are usually addressed by different coverages within the policy. Question 16. A small business's cyber insurance policy includes coverage for social engineering attacks. which of the following would most likely be covered? A hacker gaining access to the business's network by exploiting a software vulnerability. B. An employee wiring money to a fraudster impersonating the company's CEO. C. A ransomware attack that locks the company's systems. D. A third-party vendor suffering a data breach that affects the company's operations. Answer: B. An employee wiring money to a fraudster impersonating the company's CEO. Explanation: social engineering coverage is designed to cover incidents where fraudsters manipulate employees into performing actions that lead to financial loss, such as transferring money or divulging sensitive information. This typically includes scams like phishing, pretexting, or impersonation. Cyber attacks like ransomware or vulnerabilities in third-party systems would be covered under different parts of the policy. Question 17. Which of the following would likely be covered by cyber insurance under privacy liability coverage? A legal settlement for damages caused by a data breach. B. Costs to restore damaged hardware after a cyber attack. C. Cost of paying a ransom to unlock encrypted data. D. Reimbursement for lost income due to a network outage. Answer A. A legal settlement for damages caused by a data breach. Explanation: privacy liability coverage addresses the legal and financial damages that result from the mishandling of personal or sensitive information, such as those arising from a data breach. This can include costs related to lawsuits, settlements, or regulatory penalties. Coverage for ransom payments or restoring hardware would fall under different policy sections like cyber extortion or property coverage. Question 18. What is the primary reason insurers require businesses to implement certain cybersecurity measures before issuing a cyber insurance policy? A. To reduce the policyholder's premium costs. B. To ensure the company complies with regulatory requirements. C. To lower the risk of a cyber attack and ensure the policy's effectiveness. D. To guarantee that the business has the capacity to respond to cyber attacks. Answer: C. To lower the risk of a cyber attack and ensure the policy's effectiveness. Explanation: insurers require businesses to implement specific cybersecurity measures to mitigate the likelihood of a cyber attack. The goal is to reduce the overall risk of claims under the policy. By having stronger cybersecurity protocols in place, the business becomes less likely to experience an incident that would trigger a claim, making the policy more effective and less costly for both parties. Question 19. Which of the following would most likely fall under cyber insurance policies? Extortion coverage. A. Legal fees from a lawsuit following a data breach. B. Business income lost due to a ransomware attack. C. Payment for a hacker's ransom demand to unlock encrypted data. D. Costs to notify customers affected by a breach. Answer: C. Payment for a hacker's ransom demand to unlock encrypted data. Explanation: extortion coverage within a cyber insurance policy covers the costs associated with responding to a cyber extortion threat, such as paying a ransom demanded by a cyber criminal to unlock encrypted data. This part of the policy helps mitigate the financial impact of ransom attacks, including the payment and any related costs to prevent further harm. Question 20. Which of the following statements is true about the relationship between cyber insurance policies and compliance with data protection laws? A cyber insurance policy automatically ensures compliance with laws such as GDPR. B. Cyber insurance policies always cover fines and penalties imposed by regulatory bodies for non-compliance. C. Insurers may require proof of compliance with data protection laws before issuing a policy. D. Non-compliance with data protection laws will result in automatic denial of claims under a cyber insurance policy. Answer: C. Insurers may require proof of compliance with data protection laws before issuing a policy. Explanation: insurers may require businesses to demonstrate compliance with relevant data protection laws such as GDPR or CCPA before issuing or renewing a cyber insurance policy. This is because compliance with these laws reduces the risk of legal penalties in the event of a breach. However, having cyber insurance does not guarantee compliance, nor will it typically cover fines or penalties resulting from non-compliance. Question 21. Which of the following scenarios would most likely be covered under cyber insurance policies? A business interruption coverage. A. An employee's laptop is stolen, leading to a data breach. B. A distributed denial of service (DDoS) attack brings the company's website offline for several hours. C. A hacker demands a ransom payment to unlock encrypted data. D. Legal fees incurred due to a class action lawsuit following a data breach. Answer: B. A distributed denial of service DDoS attack brings the company's website offline for several hours. Explanation: business interruption coverage is designed to cover the loss of income due to disruptions in operations, such as those caused by a DDoS attack that shuts down a company's website or services. Its coverage compensates for lost revenue during the period the business is unable to operate normally. Question 22. Which of the following is typically excluded from a cyber insurance policy? A. Costs to notify affected customers in case of a data breach. B. Legal fees for defending against a privacy lawsuit. C. Physical damage to office buildings caused by a cyber attack. D. Costs to restore data lost due to a malware infection. Answer: C. Physical damage to office buildings caused by a cyber attack. Explanation: cyber insurance typically covers digital losses related to cyber attacks, such as data loss, ransomware, or legal defense related to privacy breaches. However, physical damage to office buildings or non-cyber-related property is generally excluded from coverage under most cyber policies, as this would fall under property insurance. Question 23. What is one key benefit of having a cyber insurance policy for small businesses? A. It guarantees that the business will avoid any data breaches. B. It helps cover the costs associated with responding to a cyber attack, such as investigation and legal fees. C. It ensures that a business will never face a network security incident. D. It covers all the damages caused by the business's own negligence. Answer: B. It helps cover the costs associated with responding to a cyber attack, such as investigation and legal fees. Explanation: cyber insurance provides financial protection by covering the costs of responding to a cyber attack, including investigation, legal fees, and public relations efforts. It doesn't prevent breaches or cover all damages caused by negligence, but it helps mitigate the financial fallout from a security incident. Question 24. Which of the following would most likely be included in the cyber extortion coverage of a cyber insurance policy? A. Paying a ransom to recover encrypted data. B. Legal defense costs from a lawsuit filed by a customer after data breach. C. The cost to restore data after a malware attack. D. Loss of revenue due to a DDoS attack. Answer: A. Paying a ransom to recover encrypted data. Explanation: cyber extortion coverage specifically addresses incidents where cybercriminals demand a ransom, often in exchange for unlocking encrypted data or stopping a disruptive attack. This coverage would typically pay for the ransom or other costs associated with the extortion attempt. Question 25. Which of the following situations would be most likely to trigger coverage under a data breach clause in a cyber insurance policy? A. A competitor hacks the company's website to steal trade secrets. B. A business's internal employee accidentally sends customer data to the wrong recipient. C. The business's website is temporarily down due to a DDoS attack. D. A hacker holds the company's data hostage and demands a ransom. Answer: B. A business's internal employee accidentally sends customer data to the wrong recipient. Explanation: a data breach clause in a cyber insurance policy typically covers incidents where sensitive customer or employee data is exposed or accessed without authorization, whether by external hackers or internal errors. The accidental sending of customer data to the wrong recipient would likely trigger this coverage, whereas a DDoS attack or ransomware would be covered by other parts of the policy. Question 26. Which of the following is a common exclusion in most cyber insurance policies? A. Data breach response costs, such as customer notification. B. Costs associated with restoring lost data after a cyber attack. C. Reputational damage caused by a cyber attack. D. Legal defense costs related to a privacy lawsuit. Answer: C. Reputational damage caused by a cyber attack. Explanation: cyber insurance policies often exclude coverage for reputational damage caused by a breach or cyber attack, as this is considered an intangible loss, while legal costs, data recovery, and breach response costs are generally covered. Damages related to public perception or loss of trust are not typically included. Question 27. Which of the following scenarios is most likely to be covered by cyber insurance under a network security coverage provision? A. A hacker obtains personal data of customers through a vulnerability in the company's system. B. A company suffers financial loss due to a supplier's system failure. C. A business is required to upgrade its security system due to new regulations. D. A company faces downtime from a virus that disables its employees' devices. Answer A. A hacker obtains personal data of customers through a vulnerability in the company's system. Explanation. Network security coverage typically covers incidents where a hacker exploits vulnerabilities in a company's systems to access or steal sensitive data. This coverage would help mitigate the costs of investigation, data recovery, and legal expenses related to the breach. Question 28. Which of the following is not usually a requirement for obtaining cyber insurance coverage? A history of previous cybersecurity incidents within the company. B. Having up-to-date network security measures in place, such as firewalls and encryption. C. Having an incident response plan in place for dealing with cyber attacks. D. Using secure passwords and two-factor authentication for sensitive accounts. Answer A. A history of previous cybersecurity incidents within the company. Explanation. Cyber insurers typically look for proactive cybersecurity measures such as up-to-date security systems, incident response plans, and secure access protocols. While a history of previous cybersecurity incidents might affect premiums or eligibility, it is not a requirement for obtaining coverage. Question 29. What is the primary purpose of a retroactive data ECA cyber insurance policy? A. To specify the duration of coverage for claims related to prior events. B. To limit the amount of compensation for claims made after the policy's expiration. C. To determine the timeline in which claims for past data breaches can be filed. D. To outline the exact conditions under which the policyholder can file claims. Answer A. To specify the duration of coverage for claims related to prior events. Explanation. A retroactive date in a cyber insurance policy specifies the earliest date from which coverage applies to incidents. This is crucial in ensuring that claims related to events occurring before the policy's start date are covered as long as they are within the retroactive period. Question 30. Which of the following would typically be excluded from a cyber insurance policy's coverage for data loss? A. Data destroyed by a cyber attack or malware. B. Data lost due to a hardware failure or human error. C. Data lost during a natural disaster or fire. D. Data lost due to a hacker exploiting a software vulnerability. Answer C. Data lost during a natural disaster or fire. Explanation. Cyber insurance policies typically cover data loss resulting from cyber incidents such as hacking, malware, or human error. However, data lost due to non-cyber related causes such as a natural disaster or fire is generally covered under property insurance, not cyber insurance.